I'm Profit Prince, and I spend an unhealthy amount of time studying money, debt traps, and why people make decisions that would make their bank account cry. If you've ever wondered how your neighbor can drive a £70,000 truck while still complaining about rising chicken prices, you're about to get answers. Section 1. The madness behind car payments. Let's start with something light. The average new car payment is now over £700 a month, and that's for a normal car, not a spaceship on wheels, trucks and SUVs. Those payments jump to £900, £1,100, even £1,300 a month, every single month for years. We're talking 6, 7, or 8-year loans. Some lenders are even out here offering 10-year loans, which should be illegal or at least come with a therapist. Why do people accept this? Because the monthly number looks friendly. It's financial catfishing. Stretch the payments long enough, and suddenly a financial disaster looks affordable. Section 2. The emotional manipulation. Behind car buying cars used to be transportation. Now they're personality traits. You're not just buying a truck, you're buying the fantasy that you climb mountains, rescue campers, and live a life worthy of a slow-motion commercial. Even if the closest you get to off-roading is parking on a curb at Tesco. The industry knows people don't buy cars logically, they buy them emotionally. So they design ads that attach identity to metal and wheels. A truck equals hardworking. A luxury SUV equals successful. A small car equals you hate yourself, apparently. It's not accidental, it's engineered. Section 3. The trap. Extended loans and negative equity. Remember when car loans were 3 to 4 years? Yeah, those days ended the same year the flip phone did. Now it's 6 years, 7 years, 8 years. And before long, pay this off in your next life financing. Sure, the monthly payment drops, but the total cost skyrockets. A truck that should cost £60,000 turns into £86,000 with interest. And after a few years, the buyer owes more than the car is worth. That's called negative equity. It's like being underwater financially, except the ocean is made of paperwork. So what do people do? They trade the car in, roll the negative equity into a new loan, and repeat the cycle again. It's not transportation anymore. It's financial reincarnation. Dealers love this. You become a lifetime subscriber to Car Debt, the series. Section 4. The 0% APR illusion. You've seen the signs. 0% financing. Free money, today only. Yeah, about that. It's not free. The cost is hidden in the full price of the vehicle. If you qualify at all, many people don't, you're either getting a discount on the car or cheap financing, never both. It's a financial buy one, regret two special. Section 5. The lifestyle gymnastics people perform to afford their cars. This is where things get creative. People will move into smaller apartments, live with roommates longer, cut groceries, cut holidays, take second jobs, deliver food using the same truck they're financing. It's not owning a truck, it's becoming employed by your truck. Others dip into retirement accounts. Some use personal loans to cover down payments. Some put maintenance on credit cards. It's a 3-ring circus, and the clown is your bank balance. Section 6. The multi-car disaster. A lot of families don't have one huge car payment. They have 2 or 3. Dad's truck, mum's SUV, teenager's car for school. It's like running a minicab company, except the company loses money every single day. Insurance alone can hit £200 to £500 a month. Maintenance? A brake job can cost £800 to £1,200. Fuel? Your truck drinks petrol like it's trying to forget something. People don't calculate any of this. They only calculate, can I make the monthly payment? Not, should I? Section 7. The final reality check. Let me give you a real scenario. £55,000 truck, 7-year loan, 6% interest, approximately £800 a month. Total repayment, £67,000. Fuel over 7 years, £29,000. Insurance, £21,000. Repairs, £15,000, grand total £130,000 for a truck worth £15,000 at the end. That's not a car, that's a wealth removal device with heated seats. Section 8. Why people defend their bad car decisions. This is the biggest psychological trap. Once someone buys a car they can't afford, they get emotionally attached to it. Criticize the purchase, they'll defend it like you insulted their firstborn child. It's identity armor. You didn't attack the car, you attacked who they think they are. That's why logical advice doesn't work. It's an emotional decision disguised as a financial one. So next time you see someone driving a truck that costs more than your house, don't be jealous. Just know there's a good chance they're at home eating cereal for dinner, calculating whether they can afford petrol to work tomorrow. And meanwhile, your reliable, fully paid off car is looking like a silent financial flex.